Hey accountants, ever wonder how big companies manage thousands of transactions and still close their books on time? The answer is ERP systems. In this video, I'll break down what a typical accounting ERP looks like in plain English. ERP stands for Enterprise Resource Planning. It's basically a software that connects all parts of a business, accounting, inventory, HR, sales, into one system. ERP is essential for real-time data access, streamlined automation, and enhanced financial oversight. Let's take a look at the key core modules you'll typically find in an accounting ERP system. These modules form the foundation of how financial data is recorded, managed, and analyzed across an organization. At the heart of any accounting ERP system is the general ledger. This is where every transaction ultimately ends up, whether it's from sales, expenses, or inventory. It's the central hub where financial statements are generated. Supporting this is the Accounts Payable module, which manages vendor invoices and payments, tracks outstanding liabilities, and monitors due dates. For example, when a company receives an invoice from a supplier, the typical journal entry might be debit expense or inventory, and credit accounts payable, capturing both the cost incurred and the obligation to pay. The Accounts Receivable module tracks what customers owe the company. It manages customer invoicing, monitors collections, and keeps an eye on aging receivables to ensure timely payments. For example, when an invoice is sent to a customer, the typical journal entry is debit accounts receivable and credit sales revenue, recognizing the revenue earned and the amount due from the customer. The Inventory Management module tracks both the quantity and value of stock on hand. It integrates seamlessly with purchasing and sales, ensuring real-time updates across the system. When a sale is made, the ERP automatically reduces inventory levels and records the cost of goods sold. From creating purchase orders to matching them with vendor invoices, this module also connects closely with both accounts payable and purchasing, helping maintain accuracy throughout the supply chain. The Purchasing or Procurement module handles the creation of purchase orders and ensures accuracy through a three-way match, comparing the purchase order, vendor invoice, and goods receipt. It works closely with both the inventory and accounts payable modules to streamline the procurement process and control spending. The Cash and Bank Management module in an ERP system helps you handle cash receipts and disbursements, perform bank reconciliations, and provides real-time visibility into your cash balances. The Fixed Assets module allows you to track acquisitions, calculate depreciation, and manage asset disposals all in one place. It integrates with the general ledger and automates depreciation journal entries to ensure accurate and timely reporting. The Financial Reporting module allows you to generate reports like profit and loss, balance sheets, and even drill down into transactions, all in real time. Here's how ERP modules work together in a typical workflow. You start by issuing a purchase order for raw materials. Once the goods are received, they're added to inventory. Then, the vendor's invoice is recorded in accounts payable, and behind the scenes, the ERP automatically posts the related journal entries to the general ledger. Every step is connected, ensuring accuracy and efficiency across the system. Popular ERP systems used by accountants include SAP, Oracle NetSuite, Microsoft Dynamics, QuickBooks Enterprise, Xero, and Sage Intacct. Here's a summary table that brings together all the modules we've discussed, along with a brief overview of their key functions and how they contribute to the overall ERP system. If you found this breakdown helpful, like and subscribe for more Accounting Made Simple. Drop a comment if you want deep dives into specific ERP systems.